the top 5 mistakes, covering those, and then really just how we help clients try to avoid that. So our whole focus today is really just establishing what those mistakes are, how you can kind of commonly fall into it. And it's not really anyone's fault. Understanding that if you can put some strategy behind this and you're really understanding big picture, ultimately, we want to help clients avoid these common mistakes. My name is Matt. I've been with SDIRA Wealth now for going on 5 years. Been blessed to help many, many clients start to build their portfolio at many different stages, learning advanced strategies, learning how to figure out how to get started even on their first one, but also how to scale their portfolio over time. And it's really been exciting because every day I get to teach, every day I get to analyze properties, analyze deals, and been doing this as a company now for 25 years. So we actually celebrated our 25-year anniversary, and along the way we start to see a pattern of these mistakes that people fall into. So we really want to just help on this first one figure out how to identify those. So ultimately, you are kind of being at least visible of those, aware of them, so you don't fall into those same traps yourself. So, the one thing to think about as you're investing is that real estate investing is a long-term play. We don't want clients to get into real estate investing if you're just really trying to make a quick buck and you're really just trying to turn around and sell property and do that quickly. That's not real estate investing necessarily. That's actively working in real estate, right? If I'm going out and I'm finding real estate deals and I am looking for a home that I can flip, I'm going to work on it, I'm going to be active with it. That's now becoming more of a job, right? I'm actively engaged in it. When you think about it from an investing standpoint, we want it to be very passive. So it's not really about timing the market. We're not trying to find this is the best time to do it. It's really about your time inside the market, how much that you can lean into the assets and the leverage of a property to do so. So if you stick with real estate, it is something that is going to keep paying you back tenfold, even through ups and downs of markets, even through if you had a bad tenant, things like that will happen, right? You're going to have to look at it from a big picture perspective. But the other thing too is that a lot of investors lose momentum. They start to understand that whenever you're getting that started on that first one, what's the plan after that? How are you actually going to step to your next property? Because for most people, one rental property isn't going to drastically change a situation or change your retirement. Now, it definitely will help, but really understanding that there needs to be a plan in place and a strategy to help you do that. So we're going to dive into the first one. This is one I see probably the most common, especially on first calls or talking to clients that already have rental property. A lot of it was an emotional decision. It was either, hey, we really love this primary residence, or we wanted this as a second home. The term accidental landlords have popped up because ultimately you're always thinking of it in a picture of like, well, I love this house. I love the neighborhood. I love where it's at. I love the look of it, the feel of it. You start falling in love with the aesthetics of a property and understanding that those things, while it can be beneficial, those aren't really what's building wealth for you. I've had a client ask if they could change the color of a cabinet for a rental property. I was like, you can absolutely do that, but why invest that money? You're not living there. It's a cabinet you're never going to see, you're never going to open. So start thinking about it less as an HGTV mentality of let's make this perfect little house and more of a wealth mentality. So when we're doing that, we want to think about have you actually focused on the right things? And this is where our solution really comes in. As a team, we're analyzing 30 plus markets and we want to focus on the things that matter. So whether you're doing this on your own or whether you're working with our team, the things you want to start looking at is the profit and loss. Let's get to the nuts and bolts of that property. Is it going to cash flow? Have we ran proper analysis? Are you looking at comps in that area? Are you seeing what other rental properties have performed at? Seeing what active leases? You can call property management teams. You can call realtors in those markets. You can explore the free websites all you want. Those are all tools at your disposal. Now, we have a team that does all of that already, so it's a big time saver for our clients. But we're not only looking at the profit and loss statement first, the other things you want to look at are what are the tax implications. My wife fell in love with a beach property. We live in Florida, and she really wanted to buy that and run it as a short-term rental, right? So in my role, I'm thinking automatically, okay, can this property generate enough income? Is it going to be a good investment? The main thing we started looking at was not only the property tax implications of that area, but the insurance. Being next to a beach, insurance rates are very high. So we landed on the number and the cash flow didn't generate a positive enough response. So would we love to have a beach property that we could also visit and stay in? Yes. But again, that's an emotional thing. We're weighing in our own personal interest into this investment, not just it as a black and white, is this going to make money and be profitable long term for us? So those are things that you want to think about. The other thing you want to analyze is what is this market going to look like in the next 5, 10, 15 years, right? So what are the industries in those markets? How are they going to evolve over time? Florida is one that's very tourism dependent. If we got into a situation where there's economic downturn, people are losing jobs, one of the first things that tends to slow down is vacations, right? People take less vacations, they take smaller vacations. So those are all factors that you have to determine whenever you're looking at a market and figuring out, will this be a good long-term investment? And we really try to focus as much as you can to determine what those are. And the best ways to do that is look at where companies are investing. Look at where the businesses and the local governments are putting their dollars. That is going to tell you a story, right? If you have the Costco's that are going in and you have major employers, you have Amazon facilities, you have local infrastructure being built and reinvested back into the community. Those are things that are going to be solid indicators for you to know that there's a lot of growth happening here. We have a lot of revenue that's getting generated from these businesses investing. And those are things that we look for as a big part of this. So again, don't make the emotional decisions and really try to focus on black and white. So just try to remove that. So, all right. Number two, not every market builds wealth. We see this quite a bit. We turn down countless markets every single year on not to invest in. We're looking at macro data. So as you're looking for a property or even a market specifically, understanding what does the population growth look like? Because that has to be a sustainable growth market. They, our development team sometimes calls it, it's the U-Haul index, right? Where are people moving from, one-way destinations, and where can we see the most potential for those? Because where the people go, they're going to need houses. They're typically going there for jobs or to get new jobs. So those are a big one. Number two, job growth. We want to see something very sustainable and typically in areas that are very essential type jobs. Again, if you're going into a market and the major employer there is one specific industry, and how dependent are all of your rental properties in that market on that one factory or that one manufacturing center, right? Economic shifts can happen. So you want to look for also job diversification. We love to look for healthcare. We love to look for education. We love to look for agriculture, things that are going to generate things that people need. We always need food. We always need jobs. So education, big part of that happening and growing. And then we also know that people are going to get sick. People are going to have kids. Those are all things that we're going to need those industries for. Understanding that, very big part of this. Another thing to consider is that whenever you're looking into a market, a lot of the local laws will dictate a ton of how you can manage this property. There are clients that we have in California and they own property with us out of state. They actually have more control of their property out of the state of California than they do in their home state where there's a property that they own that's right down the block. There are tons of laws against even the landlord going and knocking on that door. You have a lot of focus on how you're going to be able to prevent elongated vacancy, people getting into your property and squatting and staying there. I'm sure everyone's seen the headlines of those horror stories around that. Well, those are happening in states that are being very tenant friendly and very not landlord friendly. We're focusing on this as a passive investment for you. If you were in a judicial state where you had to pick up and go to court because there's a tenant that won't get out of your property, that's not passive, right? You're now stepping into an active role. So we're always looking for markets that we non-judicial states, areas that can be very landlord friendly, where you could have a team that's doing all that work for you if it does happen to happen. But the other thing, surprisingly, is that those evictions and elongated squatting, things like that, don't tend to happen in those states that are landlord friendly because people understand they can't get away with it. So, as you're looking at a market, looking at that, understanding what those laws actually look like and who do they favor. Affordability is another key factor. When you're thinking about building your wealth, and you can go into a market and get multiple properties versus one, can that stand to grow your portfolio larger because you're now leveraging more property? You're able to diversify versus if you just had $1 million home and you're riding all of your eggs in that basket, you're playing a tight game. That property has to perform well. It has a large risk attached to it if it's not occupied versus an affordable market where you can get in now and benefit from those homes growing in value. We're looking at areas that we can go in and still build in the $200,000 range. If we can get into that aspect of it, those are homes that are now slowly disappearing. Those are becoming the three and the $400,000 homes quickly. So if you can capture that and it's in a growth market, why not be able to buy more property than just depending on one that's going to do that? And lastly, rent demand. We're looking at, is there enough rental demand in this market to grow and to help support to minimize occupancy or minimize vacancy for clients? We really want to focus on the ability for that property to perform because being able to have solid rent demand and growth, those are things we're continuing to look for. So again, wrapping up this topic, jobs, people, infrastructure. Lean on those things. If you have that in that market, it's going to do well for you. Number three, poor property management. People ask me all the time, Matt, what is the mistake that most people make that they don't see coming? What are the issues that you see? What makes a client successful versus not successful? Almost 90% of the times, if we're having an issue with a specific property outside of unforeseen circumstances, it's with a property management team. And when I say with a property management team, it's typically the relationship with that management team. Most management teams that exist don't set out to do business to not make clients happy, right? Their whole goal, their whole model is built around, hey, I want to have a successful business. I want to make people happy. Those companies that don't go after that don't last long. And ultimately, for you as a landlord, that relationship is key to your success. Being in the real estate game isn't meaning that you're going to be able to treat it like a stock or treat it like a 401k where you can just set it and forget it. No matter if it's passive or not, it does take a little bit of just involvement, right? And I'm not saying that you have to fly down and visit the property every single month or even every single year, but it's about having a relationship with the people who are running that property for you, and they know you by name. They know what to expect. You've laid out clear expectations as far as communication with them. And if you can really set up to have a relationship with that client and with that property management team, you're going to find success. They're going to want to work hard for you. They're going to want to make you happy. They're going to want to keep your business. But on their side too, if you get a good company, they're going to want the success of your property as well, because most property management teams make a percentage off of the rent. Now, if they can get a good tenant in there that stays longer, and they can get a good tenant in there that pays more rent and we can increase rent, they're going to make more money too. So it's a win-win system. So look at that. If you have a system with your property management already and you feel like the communication isn't there yet, that would be one place to lean into and make sure that's established. The other piece of this that you want to make sure of is that you have options, right? There's things that can happen with property management teams. They could change owners. The owners could go through life changes themselves. They could break down as a company. Things will potentially happen. Now, the best way that we help clients with that is when we go into a market, we're always looking to find the top teams in those areas. And we have more than one option for clients when we go there. We know that going into that, it could be things that are going to change. We want to be prepared for that. So we're going to have more options. So think about that too. When you're going into a market, is there only one landlord game in town? And am I locked into only working with this one person? Or do I have some options? I love this part on here too. Passive income feels passive when systems are set up right. That's crucial. That customer service team can action it quicker for you and get it right off the bat. So then your call with your portfolio manager is really about strategy. How do we figure out anything that could be doing better on the property? How to make it more profitable? But also too, where's your next step? How are you going to scale that portfolio? Do you have a clear path for that? All right, number four, no long-term strategy. Mentioned this at the beginning, but really understanding what the future of this property looks like. This also comes into play if you're buying property in partnerships. One of the things that we see in a partnership is making sure that both partners have a focus around where they want to be. Is this a 5-year play? Is this a 10-year play? Do I want to eventually sell this property in this portfolio, or do I want to hand this down and diversify it? We're always looking at this from a lens of about a 20-year outlook. If you've been on calls with our team, you've gone over specific property numbers, we look at that. It's the 20-year outlook on this is what we try to start with. You can obviously hold on to this property well longer than that, but we want to understand what properties should I be focused on? What are my tax strategies around this? When do I have this property paid off? What's my strategy around that? Because ultimately, we're trying to get you to that goal of financial freedom. It will take time, but there's a ton of strategies that you can do to impact the payoff period and the quickness that property gets paid off. So we're looking at that as a holistic picture for you. So as you're analyzing your own property and your own portfolio, do you understand what this property is going to do for you? Do you understand in the next 5 years what options you have? So things to consider. What's your current interest rate that you're in? Because if interest rates fall, you could have the opportunity to refinance that loan, to pull equity out. You also want to analyze with your portfolio manager, where's the market value of these properties over time? Where has my property landed? How am I protecting myself from inflation? How do I make this more profitable? How can I protest my taxes if it's eligible in an area? So those are all questions you want to consider when this. Every property must answer really three questions. Why am I in this market? Why this specific strategy? Why am I doing this? Whether it be I'm running this as a short-term rental, I'm running this as a midterm or a long-term rental. I want those questions answered. And then I also want to figure out how does this fit into my personal goals and my long-term plan? And does it match what I'm looking to do? Because as I talk to clients that have had property, the biggest thing that comes up is if I just would have held on to that property longer, I would have made more money. I've had clients that saw that they sold homes during COVID, during a peak period there. They still look back at that homes and realize I could have kept that home and been way more profitable now. Hindsight's always going to be 2020, but most investors lose sight of that long-term path for that property. But if you're getting a property that's well built, it's new construction, you're going to have the time to not have to worry about as much of those expenses because as properties deteriorate, that's really when more of those question marks start coming in. Should I sell this property or should I reinvest in it? So our focus with that is making sure that from a builder and a developer side, we're helping get properties that are new, that are going to help you minimize those risks. But as you're shopping property on your own or looking at your own portfolio, analyze that. Let's figure out, is this property something that I need to continue to hang on to? Or maybe I can utilize the equity in that property versus just having to sell it. There's a tons of plays that we can run. A 1031 exchange, if you do sell it, might be also very tax beneficial for you. So have the strategy, have the plan all around that. If you don't understand what you're going to do with, that's where you can hop on and have those plans and those calls with our team. We're looking at this as building wealth for you holistically. So we want to make sure that happens. But big key factors, I tell people this all the time. This isn't a get rich quick strategy, but it is a get rich for sure strategy if you stick with it, if you make understand that it's not going to build overnight. It's going to take some time in the market to do these things, but we're here every step of the way to make sure that happens. And hopefully from these videos and this educational tools, you'll learn some more things along the way too. Number 5, last one. So waiting too long to start. I hear this probably the most common. It's honestly sad when I hop on to a call with somebody who's 65 and they have more equity in their primary home than they have in their 401k to work with for retirement. And they're looking around and they're understanding what's happened with inflation. They've understand how much they're getting from Social Security, that they really never put a plan in place because they were focused on work. They were focused on just surviving. Those are things that are going to come back and you'll look back and you're like, I wish I would have done this. I wish I would have started sooner. I wish I would have at least bought another property or tried something new. There's always going to be fear whenever you're trying something new. There's risk involved. There's things that are going to be challenges that you'll face when you go down a new path. That's why not a lot of people hit that financial freedom that they truly want. They have to go back to work in retirement. They're having to make decisions on what to do. So ultimately, for clients, we're just here to help prevent some of those mistakes, but also we want to show you how to reframe your thinking to understand you have a lot of options. There's always a path to figuring out how to get your first property. It's always the hardest one. But if you can talk strategy, and if you've had a call already and you didn't feel like that you had a clear strategy on what to do next, then that's where I'd invite you to hop back on that, email that portfolio manager, call them so we can get that plan put together for you because you don't want those excuses holding you back. There's going to be things that you want to look back and wish you had started sooner. Ultimately, we want to make sure that from your perspective, any tools, anything that's available is given to you from free. This is your most expensive mistake that you can make is not at least trying and not at least getting started. So I definitely think that the goal of buying real estate now, what we're looking for is not to do it just because it looks pretty, not to do it because a friend told you to do it. We're not doing it because you haven't researched it. You were never taught in school how to invest in real estate, right? You were never taught how to invest in assets because those are things that are a little bit more complex that some people don't even know how to teach about. We're here as a team doing this for a long period of time to help avoid those mistakes. So really hope to share that experience with each one of you and to hear about your stories from my colleagues and really try to focus on a path that can align for you. So if you're not part of our member site, the right side of the screen, you can screenshot this, tap the QR code, scan it if you're on a laptop. But our free education is something that my main focus of this company is geared around. I'm really trying to help our clients be more empowered. So join the member site. You'll also have access to all of these. Book a call with our team. If you know your portfolio manager, great. We'll make sure you get back to that person you talked to initially so we can pick up where we left off. But again, if you're a current client, make sure you have that next step lined up with that portfolio manager and you're thinking about what's your long-term strategy, how you're going to build wealth there. Thank you so much for being here. I hope you learned a little bit, and I hope that you'll come back next week and learn the next lesson. So excited. Thanks a lot, guys. Have a good day.